Hey everybody, this is Ben Casnocha, co-founder and partner at Village Global, a network-driven venture firm. And this is our podcast, where we go deep on all things business and technology with world-leading experts. Welcome everybody. We'll come to order. My name's Ben Casnocha. We aspire to operate our venture firm as a network, as many of you know. And this event where we bring together founders, network leaders, and some of our LPs of the firm is one manifestation of our commitment to doing this. Many of you are longtime friends of ours. For those who are new to Village, we're based here in the Valley and backed by people like Jeff Bezos, Sarah Blakely, Bill Gates, Mike Bloomberg, and of course, the one and only Mark Pincus. And this evening, we're excited to hear from Mark. Mark's a longtime Silicon Valley entrepreneur, original pioneer of the social networking era, an incredibly successful founder, CEO of Zynga. He's gone from zero to billions and lived to tell the tale. Tonight's format, I'm going to ask him some questions, then we're going to do a few segments of Q&A. So there's actually going to be a bunch of Q&A today. So if you have a question for Mark, you'll probably have an opportunity to ask it. Twice in the conversation, I'm going to go to all of you in the audience, and we'll have more of a town hall format. Without further ado, let's welcome Mark Pincus.
Thanks. And my mom's here somewhere.
All right.
Right in the front.
The most important person in the room.
She couldn't convince my daughters to come. So.
Well, for those of you who are founders in the room, and I was just telling some founders downstairs, Mark is an investor in your company. So we're indirectly through Village, of course. So this is a really special gathering to bring together somebody who is a backer of Village and thus a backer of you all for an intimate conversation about entrepreneurship and success. So we're going to go through a range of topics and then, of course, field your questions. Mark, you said, quote, "A lot of people were feeling sorry for me in 2007. You started Zynga in 2007. Tell us about that quote and tell us about the founding story of Zynga.
Sure. Well, so the context in 2007 is I had previously founded Tribe.net, which was one of the first three social networks, which you wouldn't have heard of today. It's part of the problem. And I kind of stubbornly stuck with this one wrong idea on Tribe and failed. And then I spent some time in what I kind of lovingly call the abyss, where as an entrepreneur, you don't know what you're going to do next, and you're like kind of wandering the planet, wondering if you're going to work again or do anything useful. And while I was in the abyss, I started to realize that I really love ideas, and I love constantly coming up with new ideas for services to bring to people and see if they like them. But the problem I saw with Tribe and the world up until 2007 was, in order to do that, you had to build a website and a company and get investors and all these things just to get up to one shot on goal, one idea. And so I was working on, my way around this was to buy out CNET. And I thought, okay, if I just owned something that had 30 million users, I could come up with all these ideas and test them against a somewhat captive audience. And so I was going to all these meetings for like a year in New York with bankers and private equity people.
You're trying to buy CNET?
To buy CNET, yeah. And it was super boring, and there was nothing fun about it or interesting, and just the same thing over and over. And they were somewhat interested, not super interested. But so then, one day I heard late in 2006 that Facebook was going to open their API up, and I thought, okay, I can get everything I was trying to get with like $3 billion of CNET here on Facebook, and they're doing the hard part, and I just have to be on this Canvas page. So I had this deeper intent that I had really built around wanting to have a format that I could test lots of ideas and get to a large audience without all of the painful hard work that I had with Tribe. And then I saw that possibility with Facebook. Unfortunately, there was a whole rash of other apps at the same time which were really silly. So there was all of, if you remember, the sending someone a drink and the super pokes, and so it wasn't seen as a very respectable thing to go build an app or even a company around Facebook apps.
You were an investor in Facebook.
I was an investor.
You were one of the first angels in Facebook.
Yes.
So you knew the company well.
I knew them well, but so it's the reason people felt sorry for me, to answer your question, is that I was like 41 years old. All of my friends and peers were like a partner at a venture capital firm, or they were doing something that seemed like a lot more useful and important. And they're like, really, Mark? Like, that's all you can come up with is to build these dumb apps for Facebook? And so people just were like, wow, okay. And it was me and a bunch of like college kids hacking away at that, like sitting at tables. So.
And before too long, of course, you were hiring thousands of people, and the company was incredibly successful very, very quickly. What did you believe at the time of founding Facebook that others did not? Or what was your unique insight that allowed you to tap into something?
At the point of founding Zynga, so Facebook founding is a different question.
Yeah.
But the point of founding Zynga, it gets to something that has become kind of an entrepreneuring strategy for me that I encourage you all to think about, which is really looking for something I've started to call the mature market phenomena. Mature markets that's already big and it's over are actually amazing places for all of us to go and innovate and think about new ideas. There's already revenue, there's already customers, there's already buying behavior, and maybe there hasn't been innovation in a long time. And I looked at gaming, and I think you'll have to suspend your disbelief to go there with me, but in 2007, gaming was a crappy business. It was declining. The casual gaming was the worst. I mean, web games were like Crazy Taxi with like crappy ads around it. It wasn't even a top 10 internet consumer activity. So no one was doing it on the web. And then all of these big, console gaming companies were in decline, and it was very mature. But I looked at this and thought, this is a lot like search when Google showed up. Google was the 55th search engine, not the first. Search was over. Like, what are you doing here? Like, this is Excite, Lycos, and Yahoo. And Google showed us that there was a level of innovation in search that would make search something different in our lives. Similarly, games is not yet as big as search. I think it may one day get there. I mean, as an industry. But the thing I believed in was that adults, actually, we all had a latent interest in playing games, but that the industry had just taken a left turn and never made games that were accessible to us, fit into our lives, and actually gave us anything valuable for the time we gave to games. It asked too much of us and didn't give anything back. And so my belief was that if we made games accessible to people, social and useful, that it could be one of the top adult pastimes, which now sounds like really obvious. But that was the big belief, and the only way I was able to prove that was Facebook opening up, because at the time, to get to a large audience, you had to get shelf space at Walmart or something. And so really this was, it couldn't have been proven without Facebook.
Yeah, and fascinating to think about the upshot of going after mature industries and believing that a trend can be turned around, contrarian and right. You had already made some money at the time of starting Zynga, and Village Global wasn't around to fund you at the seed round. How did you think about raising money in those early days? And all these founders, mostly seed stage, Series A founders, based on your experience raising at first a little bit of money and then eventually lots of money and now being a public company, what advice do you have for founders on working with VCs?
Well, let's see. Lots of different things to share. One is I think through different experiences, I had a little bit of a chip on my shoulder at that point. I was cynical about venture capitalists and about whether they really added value, and I was cynical about the whole dance that we do with investors, and I thought everyone's kind of lying to each other, and the founders are lying because they say what they care about is control, but then they take the deal that gives them the best valuation. And then the investors were lying because they would say, that they cared about valuation, or they cared about the product, or they cared about the people. I'm about backing the right people. And then what they really cared about was like valuation and control. And during this whole period, I was lost in the abyss. I spent a long time thinking about the kind of company that I wanted to create. And I think it's really good for all of you to do that and to be very intentional and to think about what is the arc, what companies do you admire, and what kind of outcomes would you like to get to if you can. And the reason I think it's so important is if you have the chance and you're in an environment where you can make choices about investors, and we're not always there, and we haven't always been there, it's important to take that opportunity to really communicate that and really try to make sure you're aligning everyone's interests. And the more, and I like to say go slow to go fast, that make it harder for yourself maybe in the beginning, getting an investor or at every stage, but get people that want to be on the same journey as you that are aligned. Same with hiring. There's so many things we're trying to do, and we're like, okay, I can solve this one. I can get this CTO or this investor. And what I found was, so I would give investors a top 10 reason list why they didn't want to invest in my company. I'd say, let me tell you the top 10 reasons you're not going to want to invest in Zynga. And if you still want to talk after that, cool. And we won't waste each other's time. It was like speed dating. And which I'm not sure that would work in dating. But they'd say, thank you for not wasting my time. I definitely don't want to invest.
So what were the top few points of the anti-sell?
I said, I'm always going to keep control and be in the sense that I will be your equal partner at the table. And I kind of jokingly said, I want to protect investors from themselves. That I didn't feel like investors who showed up in my company at most once a month, and then they would go to a partners meeting with people who showed up never a month, could actually make better decisions about the fate and future of my company than I could. I didn't think I should by myself, but where I had a chip on my shoulders in previous companies, the investors had too much leverage and power and influence and control, and they drove things. And I just felt like I was dealing with this group of partners I actually never even got to talk to, and I'd be worried that go and meet more of the partners because they don't seem to understand enough about our business. And I'd had a company previously that went public, and the VCs had no interest in the company because it was enterprise software. And at the point it was about to go public, or they saw that, they said, we're going to replace you as CEO because you've never been CEO of a public company before. And that gave me a little bit of a chip on my shoulder. But so I had all these reasons. I also said, as I built the company and went through rounds, I said, I'm not going to share any of our financials with you until after you decide to invest. These are things that investors don't like to hear.
This reminds me, some of the network catalyst companies in the room will remember when they met with Reid Hoffman, and Reid's story of raising the Series A from Sequoia was he called Sequoia and said, I'm happy to give you the opportunity to invest in my company.
Yeah.
Now, of course, he had also done PayPal and you had done companies before, so perhaps people's leverage different points in their career.
And you can sound, yes, and you can sound arrogant. My Sequoia story was that I was sitting there, and believe it or not, when I was raising our first round, we were doing $200,000 a month in cash flow and like profits, which is still kind of a novel idea, and growing quickly. And I was in front of the Sequoia partnership, and I said I wanted to raise $5 million at 20 pre, which today is like a safe note, I think. But it was a big deal then. What? And they said, Mark, how can you possibly justify that valuation? And I said, something like, if you're worried about the valuation, whether I'm at 20 pre or 15 pre or whatever, this isn't the right investment for you, because if we're successful, we're going to build a large multi-billion-dollar company, and it won't matter what valuation you came into this at. And so if that is the metric that's going to be the deciding factor for you, you should just decide now not to invest because we're not going to work out well together. So
you ultimately raised from USV, Foundry Group, KP in those early rounds. What did you see, or what was that partnership like? And any of those investors you'd worked with before?
Yes. So after I got no's from like every investor, nobody liked my pitch.
You were successful with your anti-sell. You gave them 10 reasons, and they said, "Thank you, we don't want to invest."
I aligned interests that they knew I wasn't their interest. But I ended up with people like Fred Wilson and Brad Feld, who had backed me before, and they got like a screamingly low valuation. I was at 15 pre instead of even 20 pre. But I got real partners, and I'd say people like Bing Gordon, who came in the next round with Kleiner Perkins and John Doerr, they were awesome, and they really were valuable in helping me build the company, and I guess re-inspired me in thinking that board members and investors, could actually add something.
So Mark, you have a reputation of being a tremendous product thinker, product visionary. You taught a class at Stanford, I think, titled Product Entrepreneuring. What is your philosophy of product management?
Well, we spent a lot of time, because Zynga is such a product-centric company. I mean, not just that the product is the company, but we were basically launching a new game every month, which is kind of like launching a company every month, and continuing to manage a huge portfolio of live games. And so the company was itself also kind of this petri dish of experimenting in the science of product management, which I grew to love. It wasn't a science, it's just starting to be one, and I think it should be. And there was two fundamental principles that I believe almost all things in product management boil back down to, this may not sound intuitive. But one is, are we using our engineering days well? So one of my objectives to be a great product manager was to deliver on the promise that 80% of our engineering days went towards a shot on goal. And that's not something you can perfectly measure, but the idea was to say, what can we do as product managers before this ever touches an engineer and anyone thinks about code to prove that this is worthy of their time? So how do we test, link test, focus groups? What can we do to make sure that we're not wasting their days? Or in a consumer company, it's a shame to spend 200 engineering days on something that consumers don't want. And so one of the core things I think you should try to solve for is delivering on that promise.
So 4 out of 5 days of the week,
4 out of 5 days
is building product, coding, yes, or whatever, versus sitting in meetings.
And it sounds really, really obvious, but it's really hard to actually get your organization to deliver on that promise. And you have to try tons of different ways to do it. Everything we did at Zynga was measured. Everything we did was measured in engineering days, because I felt like that was the lifeblood of the company. If you walk into Zynga today, there's a neon sign that says, "What will our players thank us for?" Because I would start and end every meeting I could saying, "What will our players thank us for?" Because so often the product managers, in trying to do their job, are not asking that question. They're asking, what can make money? What could grow this? So if we ask what will our players thank us for, then the next question is, well, how do you know that? So prove it. And if you deliver on that promise, probably on average, a good product company is spending 20% of their engineering days on something that's a real shot on goal. If you're 4Xing them, you can be wrong a lot more than they can. They don't have many, bullets in the chamber, and you have 400% of their bullets. The second principle is...
can you just pause for 1 sec? Because I think the idea of what will our players thank us for is such a powerful, concrete way of expressing the idea of being customer-centric. Like, you would read all these articles about, say, Amazon and Jeff Bezos, prioritize the customer. But at some point, that can almost seem, you get numb to it.
Yeah.
It almost feels abstract. The concrete frame of what will our customers or players thank us for really focuses the mind in an interesting way.
And it's hard to fake it on your answer. And believe me, I've had product teams that their number one thing, in Words with Friends was to add an ad unit. And I made them on the spreadsheet put the answer, what will our players thank us for? And they really wanted to build that ad unit, so they had to put something. They said, well, when we make more ad revenues, we'll have more money to spend on things our players will thank us for. That doesn't count. They're not going to thank you that you made more money and you're going to help them in the future.
So principle number 2.
Okay. The principle number 2, which is at odds with principle number 1, is that we need our product teams to go after bold ideas and be bold. Because if we just have principle number one, as we've done over time at Zynga at times, is you end up just doing mouse nuts. You end up just doing, if you have to prove that that was a well-spent engineering day, you're going to go after really little ideas that you can prove really quickly and easily. And the problem is, because they're low risk, you can create a risk-averse culture. If everyone's delivering on 80% was a good idea, then no one wants to take a risk because you've built a system that doesn't tolerate being wrong, right? So what do? So you have to, at the same time, build in structurally incentives for teams and requirements for teams to do things that act in bold ways. And that gets to this, it seems like we're pulling in different directions between being data-centric and trying to go off of our intuition. And
because being bold is often in conflict with what the data might say, or data thinking promotes iteration.
How do you measure bold? So what most organizations suffer from teams that want to be at one extreme or the other, or both. And I was just talking to the CEO of Expedia, and he was saying, yeah, this is one of my biggest issues culturally, is you've got teams that want to build very, very small ideas, and it's very, very well documented, and they've got their whole program for the next year done, and there's no room for anything different. Or they want to go after this big, bold idea that can't possibly be proven, and it's going to take 2 years or a year before they ever put it out. And so what do? How do you solve for both? And so we invented this idea called bold beats. And the idea of a bold beat was...
Beat, like B-E-A-T?
Yeah.
By the way, we're going to take questions in a minute, so start thinking.
So bold beats is this idea, how do we give teams permission to go after big, huge ideas today, or even require it? And the idea was, can you take a gigantic idea and boil it down to something pretty small and isolated that you could build in a month that has goals that you can put it out there and it will get your customers to see this product in a totally different dimension, but not screw the product. Not like, Words with Friends is now Checkers. What do you think? It's got to be something that you can put out there and it can inspire the imaginations of your player, but if it's wrong, not torpedo the product. And I'll say where part of the kind of going back to first principles is way beyond where you are at the moment. When I came back into Zynga, as I came back as CEO a couple of years ago, when the company was in trouble, I had to bring the company back to these ideas of bold beats and saying, how do we get back to innovating on core quality, in our core franchises in order to, reignite, the engagement with our products.
Any questions, reactions, comments on these product themes? And we're going to run the mic, so let's go up here, and then we'll take one other question, then I'll continue. Hikari, and introduce yourself and your company.
Hi, I'm Hikari. I'm the founder of OmniKey. We are a predictive analytics tool for designers. My question is regarding your theory on product management and your experience in enterprise. So in a hits-driven consumer business, be bold, you don't know what works, but how does that compare with your experience managing product when you're running an enterprise company?
Great question. Some translate, I think, perfectly and some don't. Thinking about, measuring lots of things in this unit of engineering days really did work. When I was selling enterprise software, I was the top salesperson, as founders often are, and I had no experience in enterprise software sales. And I was
support.com?
Support.com. And I was kind of the head PM. I felt like what your job, to me, the PM acts like a CEO, like a mini CEO. And the PM is entrepreneuring this. And in both, whether it's enterprise, B2B, or it's consumer, the PM has to be this point of integrating everything from and understanding the engineering constraints and getting your head in the customer where they are, and thinking what's going to scale as a repeatable business, because in the case of enterprise software, if you're just trying to listen to your customers, you become a consulting firm really quickly, as I learned, because they want you to solve their problem, and that's why they're paying you millions. They're not trying to pay for you to build a repeatable business as you want. So that part, I think, was similar in both. Obviously what's the benefit on the consumer side is you can iterate and get feedback loops so much faster than you could on the enterprise. It's part of why I wanted to be in consumer, because it took so much longer to be wrong on the enterprise side than consumer.
It's actually an interesting advantage to some of the consumerized enterprise businesses,
yes,
where you're selling like Slack, et cetera. You're getting the feedback loop of consumer
where
the business model
enterprise
of enterprise.
Is your consumer.
Yeah. Any other questions or comments on this product stuff specifically? We'll run up here in the front and introduce yourself.
Hi, Brendan Mulligan from Riot Games. How do you weigh the trade-off between doing the things that your customers will thank you for and building the ad unit, which pays the bills and hits those metrics that you need to hit?
It's a great question. We, early on in building Zynga, we said that there were 3 R's that we were always balancing, and it was reach, retention, and revenues, right? Where reach was like virality, retention was engagement and long-term, really what built the business, and revenues was a realization that we had to monetize so we could stay in business. And we said early on, we really want to grow through retention, because the more we invest in retention, it created the right incentives. Investing in retention meant investing in quality, and we found that we could grow over time better by retaining customers than by being this kind of sinking speedboat about virality. And everyone around us was a sinking speedboat of trying to add more people faster than they sunk, which ultimately runs itself out. So we made the conscious decision, focus on retention. It's going to incent us to focus on engagement, on quality. And we kind of were mostly retention. Maybe we were 50% retention and 30% reach and 20% revenues. And we tweak it over time, but if we're ever focusing too much on monetization, we thought it was squeezing the lemon. It's like borrowing from your future. And your players or your users can feel it too when there's too much pinch. And so it's a virtuous cycle when you're able to grow without that pinch and you put less pinch, and then it goes the opposite way against you.
Yeah, and I feel that pinch on Facebook Messenger when it asks over and over again if you want to turn on notifications.
Yes.
It's the most annoying. And you see it in all these social networks where some PM is turning the dial trying to hit some metric,
yes,
but there's nothing to thank them for as a result of that. Mark, you've done things that few founders have done, or your journey's been unique at Zynga. You founded and were CEO of the company. And I was watching some interviews with you over the weekend, and you told somebody when you started the company, I want to be CEO the whole way through. I've been a founder multiple times. This is the company I'm going to be CEO of for the rest of my life, or something like that. And then you left the company and were not CEO, and there have been a few different CEOs. You came back, and currently you're chairman and not CEO, and the current CEO has been there for 2 or 3 years now. And the company's doing well. But tell us about that journey, and how did you decide to step back, and how did you decide to step back in and take control again of your baby?
Well, this is, a good problem and way beyond, I think where you guys are so far. But you'll face this, and I think that we all have to ask ourselves, as you build a bigger and bigger company, a bigger footprint, and you have more investors, more employees, customers, ask yourself, am I the right leader for this next chapter? And you can lead in a lot of different ways. You can still be a leader, a spiritual leader, as chairman or chairwoman, but you don't necessarily have to be in the seat as CEO, but it's very tough to figure out. And in my case, we had to all of a sudden make this very rough transition to mobile, and it seemed like we needed a different strategy to win on mobile than what we had done on the web. And at the time, it seemed like you needed to get these blockbuster hits that were what had driven the traditional game industry, and mobile at first looked like that. And so I said, maybe someone else can do a better job. I don't have any experience in really high production value, really expensive production games. And we went out and recruited the best, most experienced CEO in the industry to come into the company. It turned out, not by his fault at all, that strategy was just wrong. That the company was betting it all on a whole new slate of blockbuster games at a time when it was becoming more and more apparent that almost no new games were working, and it was incredibly risky, and they were doing it at the expense of our core franchises, which were really in decline. The traffic, the revenues, the people were leaving. All of our talent was leaving. And it's very tough as founder and chairperson to go against everybody else. But that's your jobs. Your job is not to be liked and to be popular, even to be respected by your industry. Your job is to make sure that you deliver this child to be this flourishing, amazing adult with a really long life ahead of them. And you need to stay true to that future opportunity and that legacy of what you've done, and not to being liked. And so for me, I had to be in a position where I disagreed with the management team and the board for a fairly extended period, and kind of, put my day job where my mouth was, and then go back in as CEO in order to take the company through this transition. And it was really, really brutal. Zynga was on Fox Death Watch, and it was, people I can't believe
what's
it.
the Fox Death Watch?
Oh, there's
it's the Fox.
They have a company Death Watch, and you don't want to be on it. You can Google it. We were on. I learned about it once we were on it. But our stock, there was not a lot of confidence in me. I came in as CEO, and the stock went down to trade for cash in the bank. We were $1.75, and employees were leaving every week. But what I had to do to get the company back to strength was go through this turnaround playbook, which we're now seeing a lot more consumer internet companies go through this. And I think of it as reinventions, not turnarounds, because I think turnaround gets it wrong. You're not turning around these companies. They need to be reinvented for where the market is today. But these aren't old newspapers that someone is saving. Gaming is a growth market.
Can I just go back for a sec, Mark? You said you're on the Fox Death Watch, which we're all going to look up to see the state of that.
And I'm not exaggerating.
How do you? Because for most of the folks in this room, we're experiencing a Series A investor saying no to our pitch over and over again, or you have 5 employees and 2 just left, right? It's a smaller scale, but the emotions might be very similar, right? These sort of body blows. How did you, and for you, it was very public, right? You're getting attacked, these articles are coming out, or the stock, the little stock price, you said, drops. How do you sort of absorb that emotionally? And I know you're a very introspective person. How do you, were you keeping a journal during all this and writing down your true thoughts, or confiding in somebody who was sort of helping you deal?
So let's see. So first, you have to get to this you have to get conviction that you're doing something that is right, and it's for a higher purpose, which is that you got to not come back and question it. So, okay, I'm putting everything else on hold, and I'm going to dive back in, and this is worth saving and fixing. And then you have to start to realize that not everybody around you is ready to be on that journey. And so the first thing is making sure that you have the right energy around you. And there's all these people who didn't sign up for that. They joined they joined our company just before the IPO, and now we're trading way below the IPO. They didn't sign up for this. No one around them seems to be high-fiving them that they're at this company that's on death watch. Thanksgiving was tough. Everyone comes back really sad. So you have to realize that you got to just let them all go. And I And Dan, who's here, would come in. He was working with me, and he'd say, Mark, you got to go talk to this engineer or PM or designer because they're having a crisis of confidence and they're going to leave. And I did for a while, and then I was like, you know what? Focus on the living, not on the dead. So you get pretty, you triage it, and you say, all right, I got to the point that I was like, you know what? If you're questioning if you should go, you should just go. I've seen this movie before. If you're questioning it now, in 3 months you're going to go, let's save both of us, just go now. And it set me free energetically because I wasn't walking around like trying not to make eye contact with people. Like, are you going to leave next? Are you like, if you look a little down at your feet, I think you're leaving. So I was just like, screw that. And you start hiring new people who think it's awesome that the stock is so low and they're getting it, at the ground floor. And they have fresh energy and they're ready to be on a new journey. And how do you get through it? I don't know. You just, you kind of take each week.
Were you candid with your investors and board about how you were really feeling?
I've always found that the truth sets you free, and being your most authentic place and not trying to be cool or not. I don't try to portray, a whole lot of confidence that I don't have. I think actually professional CEOs do a better job, and I could do better at that.
And you've had an executive coach most of your career. Do you still today?
I do. I've worked with this really kind of full kind of life strategy coach for probably 14 years. And what I find is just creating space to process stuff. And in a very broad way, I think executive coaches are great. However, I feel like in a way, any material will do. I think if you're processing whatever is going on in your life, I feel like it just helps you gain more self-awareness, and that helps you read situations better, read yourself better, and start to build a life practice of being more first understanding the emotions that you're going through, maybe writing them down, processing them, then communicating those emotions, not expressing them in ways that you don't intend. And then I think going through that then makes you better at seeing other people who are going through these patterns, that they're not in touch with their emotions or whatever. There's so much that goes on inside of how we all deal with each other in companies that's the same as other relationships in our life. So I think just having that room every week to be processing things.
So you talk about business and life with this person?
Yeah, and a lot of times talking about like getting aligned energetically with whatever it is coming up. And I'll give you one example where this was really strategic for me, which how I met Bing. I had to go into EA early on. We were building a whole bunch of games which were very basic board game kind of things that we were putting up. And they were a lot like these Hasbro games, which EA had the license to. So EA had me come in, and at EA they had every person who was a lawyer had a card that said business development. So you're really meeting with their lawyers, and I think they know you won't go meet with a lawyer, but you'll meet with business development because maybe that'll be a good opportunity for me. No one willingly goes and meets with the lawyers, without a lawyer. So I went into a room full of these business development lawyers, business development lawyers, and I spent time with my coach to get energetically aligned with this. And I said, I know what they want to talk to me about is suing me and all this stuff, but I'm going to talk to them about the future of gaming and how Zynga and social gaming is the Walmart that EA needs. And I'm going to talk to them about this future and just sell them on this vision. I don't care if it's what they want to hear about. It's what I want to sell to them. And I'm just going to use my airtime to sell that. Luckily, this guy, Bing Gordon, who was one of the founding team members of EA, ran into one of these business development people in the lunchroom and said, what are you doing? Oh, we're going to go meet this Zynga guy and make him take his games down or make games for us or something. And Bing's like, I'll tag along. So Bing walked in. I'm giving this pitch to a room full of like angry faces about this vision for the new Walmart. And Bing happens to be there, and he takes over the meeting.
Has anyone here pitched Bing or know Bing?
Okay.
Just a couple, yeah. He's quite a character.
Bing Gordon's amazing, and until very recently he's been on the board of Amazon. He helped come up with the idea for Amazon Prime. He's an amazing friend and coach and idea generator who you should meet. So Bing takes over the meeting from the lawyers, and it's like, yes, I've been waiting for you to come here. And he'd been saying for 5 years, someone's going to come in who connects the dots on all these different things. And I happened to like be the one that walked in and said that. So that led to Bing just showing up at our company, and eventually he's left EA and went to Kleiner and invested. But by getting, energetically aligned with...
And the alignment was basically positivity.
Right. Instead of like getting ready for this fight and meeting them, where they wanted to go, I went where I hoped they might go.
So speaking of meeting people where they want to go, you were telling some of our founders earlier today about how you managed your relationship with Mark Zuckerberg because Zynga was built on top of Facebook initially, and meeting him where he was. Any lessons or anecdotes from the weekly meetings that you and the other Mark had as you were building Zynga?
Well, what I was saying to some of these founders was on the question of like how do you go about dealing with somebody where you're on their platform and you're highly dependent, or a really important sales relationship? My answer that I went through was to meet that person where they are and think about what they care about and what's the most important things in their world. These are like really obvious, but the
deepest truths often are obvious.
People don't do this. You'd be surprised. They're expecting you to walk in with your laundry list of asks, and they're so wary for that. And when you don't do that, and you show up and your ask is trying to understand what's the biggest challenges they're thinking about, and if you can be a source of truth for them that they start to trust, then you can build a different kind of relationship. And that's what we did. We had we still have a really good trusted relationship. And when you get to a point where someone feels like you have their back, and it's usually in the moments where no one else has their back, or when it's really not in your interest to be there, that you can kind of prove that.
And what truth telling about Facebook did you have insight into that you could tell Mark that he wasn't hearing from his own team?
I mean, it's not always truth people want to hear. So even in the last couple of years, I encouraged Mark to think about what's really going on with the engagement with the Big Blue app. And even though their metrics aren't showing necessarily declines in US usership or engagement, I said, maybe you want to try to look for other indicators behind those, that there might be some weakness in that engagement model that you're seeing, that the metrics aren't yet showing you. And I gave an example of Farmville, where Farmville, when people were playing Farmville, we had a net promoter score of like a plus 35. The day after they quit, our net promoter score was like minus 50, okay? I mean, just for perspective, like the IRS is minus 15, Comcast is like minus 20. And so this is
So after they quit playing Farmville? Or
yeah.
What? Okay.
So the day after they quit, they hated Farmville.
Got it.
And so it's a sign that maybe this was starting to be like an addiction. This was starting to be something that they didn't feel good about. Like, I'm happy I quit potato chips or cigarettes. So when, even though your engagement looks great and your net promoter score looks great, the insight I was trying to share with them, that I don't know if it's true with Facebook, but I said, maybe you go and start measuring the change in opinion for people after they've quit Facebook. And if it's violently against this, it might be a sign of underlying weakness in your engagement in your product. And Mark keeps his own counsel. He doesn't need anyone. He's really brilliant. I mean, I think seen. He's not maybe lauded as much today, but so he'll say interesting. That's all he ever said. Interesting. But behind that, he's processing it, and if you're giving him something that's a good idea to help him with this, it's a gift. I mean, the way you build relationships and alliances with people are, over time, doing things for them that don't have an obvious transactional payback loop that show you want to invest in the relationship. And that's like with Reid Hoffman.
Questions for Mark or reactions or comments on anything we've talked about the last, we'll start with Rachel in the front.
Maybe because biopharma has its own sort of industry challenges and PR issues, I'm really, really interested in how founders like you and like Mark Zuckerberg navigate ethics and criticism as part of your journey. I think intellectually and emotionally there's a lot to learn there, and particularly when you're making good decisions for your company, right? I worry that I will get lost one day in my own conviction for my company. I worry that all of us are at risk of getting lost in the conviction we have for our company and our mission, particularly when we have to sift through ethics and critics who aren't always fair and have to keep making those right calibrated decisions. I'd love to hear more about your journey.
Sure. I think what's hard to deal with is there's so many layers of perception, and perception is reality over time, that I think one of the hardest things is that you're starting, whether it's, Mark with his dream around Facebook connecting the world, or where I started, any of us, I think 99 to 100% of us start with like really pure intent around, today maybe it's more clear you can make money out of this, but most people really aren't doing this because they thought this was like the way to make a lot of money. They had some real desire to make a difference in the world and have a positive impact. And you do things that are motivated by that, but they have these other outcomes that are shocking to you, like the Russian hacking, or for him. And it's really tough to circle back energetically and not be defensive and I think Mark is actually amazing at it. But
how about when people became addicted to Farmville? I mean, were you expecting that, and how did that make you feel?
It's when you're like a victim of your own success, and you're like, look, everyone's using this, and like now all of a sudden people are using it too much, and even we tried to get people to play for shorter periods. So we had energy mechanics that would shorten the time of a session because we thought we don't want people doing this too much. And then that became like the number one revenue driver was people paying to not stop when the energy ran out. And we're like, it's
a win-win, yeah.
Well, but you no one plans to be the level of success that some of these companies have been, and where you start to matter culturally, and you start to realize that you are accountable on levels that you never were ready to be accountable on. And in the case of me, we had these core values, one of which was to be a meritocracy. And I wanted to take that to an extreme. And so I said to every new employee, all the way up to 4,000 employees, my commitment to you is that you should have the same opportunity in this meritocracy as employee number 5 or 10. And I was bothered by this Silicon Valley, culture that had built that you won the lotto if you were employee number 38 at Google. And I wanted to say, no, everyone should have the same opportunity. And so I challenged some of those things. And in order to do that, at some points, we went to employees that weren't adding value at where we had hoped, and we parted ways with them. That ended up being a part of a whole Wall Street Journal story that, was super negative. And I had to look at that and say, but I had this pure positive intent in the beginning, but now it's seen as like I've done something worse, and I think I was doing something better. And I think the hard part to come to terms with those is to, instead of getting defensive and feeling like you're misunderstood, it's to say, okay, maybe I tried to do things too quickly that this ecosystem isn't ready for yet, and there was some organ rejection, and can I find the truths in this and get aligned around it, and instead of kind of getting a chip on your shoulder and saying, no, we're misunderstood. And I don't know, with Zuck, I send him notes sometimes. I try to send him notes when Facebook is in kind of the worst moments and when he's going in front of Congress and early Facebook people are coming out against the company. That's when I try to send him a note to say, you've got friends and who are proud of you. Because I think that's when founders, need to know they have friends.
Powerful. Let's go to Ryan in the back.
Hey, Ryan Caldbeck from Circle Up. I'd love to hear more about the most stressful times for you in the journey, particularly before the company went public. Did the stress go up, down over time? And did you ever think it would fail before it went public?
There's such a fine line between success and failure. And I think we all are so aware of that. Maybe we're too aware of that, and maybe we shield investors from it. But I in the early days, I used to describe my experience as being on like a 5-story high unicycle. And we kept adding another story. And one of the reasons that we kept raising more and more capital is because I believed so much in the opportunity. I wanted to be the biggest macro bet on social gaming. But we were spending so much on big data and employees and teams. We were just expanding. And if anything hiccuped, our OpEx was so big. We were always cash flow positive and profitable, but if anything didn't work, we could be killed by it. And so we really needed, even though we weren't using it, every time we'd double or triple the size of the company, we didn't know that it was going to work. And so we didn't have a website. I mean, we didn't. Now it's like, oh, you're an app in the App Store and you're on people's phones. We were an app buried inside of Facebook, and if they changed one thing, which they did, often, there was no way for our users to find us anymore. We were gone. If your web browser was still open and the tab with us, fine. Otherwise, you turned your computer off and on, and Facebook didn't have navigation back, we would just be gone. I mean, they're just all of a sudden, and this idea that all of our users had to choose to come back every day. They build habit over time, and we've seen that they have, but you don't know that's going to happen. So there was constant, we probably more than most any other company, we felt existential threats to our existence all the time, and had that mentality always. And then there was a very famous moment where we and Facebook weren't sure that we had nothing signed between our companies. I mean, nothing. There was no agreements at all, and we were a very big business together. And there was a moment where we had to come to some terms, and it wasn't clear we would. And our engineers and teams were working. We literally were working 24/7 for a month, building our own website and login and all this stuff because we had to be prepared for Facebook to just take us down in a day. So, yes, there was.
Yes, there are moments of stress. Just to piggyback, and then we'll go to some more questions. Mark, Zynga scaled faster than almost any company in Silicon Valley history. You had over 4,000 employees in just 4 years. And yet today you say, fuck scale. Explain what you mean by that.
Well, which I have so much respect for the practice that Reed has built around mastering scale. My point when I said fuck scale was more that scale is not the objective. Scale is not the goal. Making our customers love our products is the goal. And my point was, if you're picking between a hamburger from McDonald's, which today maybe no one's going to pick, or you're picking between In-N-Out Burger and One Shop Burger, you're not thinking to yourself, wow, I'm so impressed with the team at In-N-Out because, they've scaled now across the country, and did you know how big a company they've become? And they're not just serving me, they're serving hundreds of thousands of other people. protein, animal style burger today, and it's just great. And it's not great, but at least I have the comfort to know that they're serving so many other people, and I feel really good about that. Or, wow, my Uber didn't show up, or they're, it says 3 minutes and they're driving the wrong way on the highway and they're actually 20 minutes. But think about how many billions of people Uber is serving. Go Uber. No, we're not, as customers, we want the best single experience, and we don't care whether it was delivered to us in a scalable, profitable way. We care that it was hand-delivered in a way that was personalized and high quality and awesome every time. So my point about fuck scale, it's not about scale. It's about, if you have to micromanage to deliver my experience and make it awesome, micromanage away. I don't care. If scale, it should be, I don't know if I have this right, but kind of an inverted pyramid, that if scale makes it easier, if scale makes it a higher likelihood that you're going to give me a higher quality experience, if scale makes it more likely that your talent will be better and better used for your customers, then scale is a wonderful thing. But what I experienced, and we just did it all wrong, was by growing so quickly and ending up with layers, the thing that I was best at was what I spent the least time doing. And my best purpose was coming up with great ideas for experiences for our users. And when I'm spending my time doing everything but that, scale isn't working for me. I'm working for it. So
let's go some questions. We had some questions in the back. We'll do Chris, and then on this side.
Hi, Chris Olson from the Meta. We're an esports training platform. Thanks for your investment. At the outset, did you consider Zynga to be primarily a gaming company with social aspects, or primarily a social company with gaming aspects? And did that viewpoint change over the years?
Great question. I would say 60-40 or 70-30. We were focused on social first, and we liked the idea of social. We liked the idea of games as a new social medium, and that's what we spent our time talking about. And so when we launched poker, our poker game, there was nothing new about we didn't have new rules of poker. The only innovation that we had was, it was the first time that you saw pictures of real people at the poker table, and we built a way for you to join a table that your friends were at, and 25% of the table joins were people going to real friends. So we saw social networks as a cocktail party, and we wanted to be this always-on bar in this very quiet cocktail party that you could actually bump into your friends at. And then so many of the way we developed features was thinking social first. And were there ways that we could help you build your social capital? We would ask ourselves, is there something we could let you do for and with a friend in our game that would change your real relationship? Form a new one, enhance one. We talked about, what bucket are you in? Are you at the top that they're going to pick you up at the airport or come over to help you move, or whatever's the top of your social capital bucket, or you're a fake friend on Facebook, but you actually wouldn't cross the street to talk to each other? And we talked about, could we, through our game mechanics, help you feel closer to people and move that? And that was what we kept coming back to innovate. We then went and looked at all these proven game mechanics that there was an incredible, set of 20 or 30 years of that in the industry that we could then bring, to bear on that.
And maybe elaborate, Mark. You have a framework that you've coined, proven, better, new, and you tell entrepreneurs, study what's proven in businesses that are already working, and see if maybe slight tweaks or recombinations can work in the case of the startup. And don't let your ego get in the way of thinking that that's not true innovation. In other words, recombination and iteration on something that it already works can be innovation, and it can lead to great success. Say more on that.
So I taught this class on product entrepreneuring at Stanford, and I was only trying to get two concepts across, and I found out how hard it is to teach, because in the end, the students kind of just barely played the two concepts back to me, and I spent the entire semester teaching these two concepts, and they were really smart. So the only other possible solution. I was not a great teacher. So it doesn't mean I'll give it to you in 30 seconds either. But the two concepts I try to get across, one, which go together, was part of the journey that we're on as entrepreneurs and product makers is to separate our winning instincts from our losing ideas. So we have these fundamental instincts, like the entrepreneur I spoke to today who has this instinct that we could use our physical space and airspace better in our rooms. He has an instinct about that, which I'm just guessing is right. But then we layer ideas on top of those instincts, which are probably wrong. So I had this idea in 2002, an instinct and an idea that maybe we could order a taxi through our phone. And I went and registered smstaxi.com. And it was a really shitty, bad idea. And that's why you don't see it today. But it turned out that the underlying instinct turned out to be pretty world-changing eventually.
So what year did you register smstaxi.com?
2002.
Okay. It's a little known fun fact.
You can look it up on internet or GoDaddy. So the question for us is, now that you've all taken this leap and it's too late to go back, how do you de-risk it? What can we all do that could fundamentally move your odds of success so that, in a lot of ways, the gift you can give yourself is a time machine? What if you could come back from 2 years from now and say, you know what, dude, your instinct about saving space was brilliant, but the way you went after it wasn't right. What would you do with that? Would you make use of those 2 years differently? Would you try 4 other ideas? What would you do with it? What you could do with it can be guided by this concept that I call proven better new. And also, I said to your group of entrepreneurs earlier, the idea of proven better new in games is that you can take mechanics and you can deconstruct a game or a product into the underlying mechanics, and you can say, what's already been proven? And if it's already been proven, like in the game, take poker. I put out this social poker game. You know what? The rules of poker are proven, even online. The idea of a table working, the way it worked, all that stuff was proven. Don't touch that. You're not going to probably have time to make the rules of poker better, or 52 cards has been pretty proven. Let's not try 54 or 36. Let's just go with 52. So take all those things as proven. But is there something in this experience that you can polish and make 1 inch better? And the hard part for us as entrepreneurs is to realize that when you say, what will our customers thank us for? They're probably much more likely to thank you for taking something that they already love and making it 1 inch better than something that they've never seen before, didn't know they wanted, and trying to convince them that they want to love that. Not to say you shouldn't pursue new, novel, innovative ideas, but what if you walked your idea all the way back to what's proven? What if you said, it might be really far back if you're in the create space in my apartment business, but if you think differently about it, and I talked to one entrepreneur who is thinking about a new approach to hosting esports leagues for game publishers or players. So go back and look at proven models where someone has either proven badly and failed, you don't want to do, or proven that they've created a framework for a B2B2C service around games, and try to figure out what you can copy from that's already been proven, and try to isolate just what you're trying to do differently and test that. Steve Jobs had an amazing interview when he first came back to Apple, and he said the problem for the previous 8 years, they were trying to make every feature 10% better, and they made the entire product 50% worse. And my example of what we did with Farmville was we had proven and better and nothing new. We just had better crops. We had better art around the crops, better math around the crops, and that was enough. And it's very hard for us as product makers. We all kind of want to be Da Vinci, and we all want to be seen in the world for our amazing new creative ideas. The world usually doesn't really want something totally new, but they really want something that's totally better than what they already love.
Fascinating insight. We had one. Let's take one more here, and then we'll wrap up.
I'm Allie. To use your words, I'm a business development professional.
Sorry. You're not a lawyer, or you are?
No, I am. But there's only one of me. There's many more of you. So, so if you dial all your companies back to the beginning and you surround yourself with your first 5 or 10 employees, or for that matter, in your personal life, you surround yourself with 5 or 10 people, who are those people, and would you have changed anything? Or put a different way, if you started from scratch today, who are the kinds of people, who are those 5 or 10 people that you're surrounding yourself with?
I can't say that I have a formula or a pattern, because I think every time it's been a different organic path. So I would say, though, that if I look for one common theme, it's I tend to surround myself with people who really challenge me much more than just accepting that what I say must be right and just being in execution mode. Because early on, I think we have to have such a dialogue because we don't have it right. And to challenge each other's assumptions constantly. Are we thinking about this right? And is too much of our ego in this? And maybe there's something underlying this that we're missing, that's this instinct. And maybe this way that we've all been pursuing it's wrong. And it's very tough because there's a desire to not rock the boat, and it's already so fragile to start something new that if you have people, it can be considered negative energy and really annoying that if someone's constantly questioning, like, all right, we just got to pick a direction and go. And if everyone's questioning the direction all the time, it could be really nuts and chaotic.
So maybe if I can jump in, picking up on this question and with the last question, Mark, we end all of our conversations with our LP luminaries this way. It takes a village to change the world. No one can do it alone. So who specifically, to answer this question, who specifically has been in your village over the last 15, 20 years that has been instrumental to your success?
There's been a lot, but I'd say 2 people stand out. I'm going to give you 2. So one is both of our friend and so much more Reid Hoffman. So Reid has been kind of an intellectual sparring partner with me on so many topics for more than 2 decades. And there's so many places where he's challenged me in my thinking that have really helped me end up at a different place. I mean, going all the way back to kind of the beginning of this, when he and I were brainstorming about Web 2.0 and the social web, and felt like there was something that we were seeing and both pursuing and challenging each other on that was different than at a time that nobody believed in consumer internet. But even now, there's so much I get out of the way that Reid is so strategic about things that I also try to emulate. And then Bing Gordon, who I talked about, has been just a constant source of creative energy, and he has this like 1,000-yard stare of pattern recognition that he's like this incredible encyclopedia that you can say, oh yeah, Mark, that was Jeff Bezos in 2003, and here's the way he dealt with that challenge. And so he has this like crazy level of pattern recognition. And also, I'd say from these people around me, I get so much emotional support and so much sometimes tough love, but really this feeling that you, it's really good to feel like you have people who are kind of in the trenches with you, and where you've built, you already know that you have relationships that transcend, whatever this company or transaction is that you feel a bigger commitment to. And I know everyone talks about like finding a mentor, and that's important. I think that these more kind of peer level, maybe it's peer plus in some ways, but I think these peer level relationships where you can really find them and establish them are more useful and valuable over time, where hopefully you're both getting a lot out of it, and you're able to find ways to help them while they're helping you. And I think, because I don't know, I've never had like a single mentor person that, you know, that I've been a follower of, or so.
Mark Pincus, thank you very much.
Yeah.
Appreciate it. That was awesome. Thanks so much for listening to the Village Global podcast. You can check us out online at villageglobal.vc. We'd love to hear from you, your feedback, your ideas, your inspirations. You can email us at hello@villageglobal.vc.